Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The crypto market is experiencing a significant surge in July 2025, with Bitcoin leading the charge by breaking through the $118,000 barrier for the first time, marking a historic milestone. This rally is fueled by strong institutional inflows, estimated at $50 billion this week alone, alongside favorable regulatory developments and increasing adoption. The broader market has followed suit, with Ethereum crossing $3,000 and altcoins like Solana and Dogecoin posting double-digit gains. Retail investors are accumulating Bitcoin at accelerated rates, suggesting growing mainstream confidence in its long-term value proposition. This bullish momentum could encourage more risk-on behavior across the sector, potentially drawing capital from traditional markets into digital assets as investors seek higher returns in a volatile macroeconomic landscape. Ripple's XRP has emerged as a standout performer, surging nearly 10% to approach the $3 psychological level. This rally appears driven by a $14 million leveraged long position opened on the hyperliquid derivatives platform, indicating aggressive whale activity. More fundamentally, Ripple's partnership with BNY Mellon to custody reserves for its RLUSD stablecoin has bolstered institutional trust, while its application for a U.S. banking charter signals deeper integration into traditional finance. Should Ripple secure the charter, XRP could see enhanced utility in cross-border settlements and institutional products, potentially catalyzing a sustained uptrend. However, technical challenges like a recent price display glitch, causing temporary market confusion, highlight the need for robust infrastructure to maintain credibility. The meme coin sector is exhibiting remarkable dynamism, with Memecore leading gains after a 70% surge attributed to viral social media engagement. Dogecoin briefly jumped 9% before retreating, reflecting the volatile nature of retail-driven assets. Justin Sun's announcement of a $100 million commitment to a Trump-themed meme coin underscores how influencer involvement continues to shape this niche, though such projects carry inherent volatility risks. The resurgence of NFT projects like Pudgy Penguins, whose token Pengu climbed over 20%, suggests that speculative capital is rotating into digital collectibles. This renewed interest could revive NFT market liquidity, but may also invite regulatory scrutiny if irrational exuberance returns. Stablecoin regulation is approaching a watershed moment as the U.S. House prepares to vote next week on the Genius Act. This legislation aims to establish clear rules for dollar-collateralized stablecoins, potentially enhancing market stability and institutional participation. Meanwhile, Ripple's RLUSD stablecoin has crossed a $500 million market cap just 7 months after launch, signaling robust demand for regulated digital dollars. These developments may accelerate the migration of traditional finance applications onto blockchain networks, particularly in cross-border payments and treasury management. However, the concentration of stablecoin reserves among few issuers could introduce systemic risks if not addressed through diversified custody solutions. Corporate crypto strategies are shifting dramatically, exemplified by Nasdaq-listed Bit Digital selling its entire Bitcoin treasury to build a 100,600 ETH position. This strategic pivot toward Ethereum reflects growing institutional confidence in smart contract platforms for yield generation and enterprise applications. Similarly, DeFi Corp has amassed over $130 million worth of Solana, betting on its high throughput capabilities for decentralized finance. Such large-scale reallocations signal that institutions now view blockchain infrastructure as a long-term play beyond Bitcoin's store of value narrative, potentially driving more sustainable capital deployment into Layer 1 ecosystems with proven utility. Cloud mining platforms are undergoing a revolution, with Ripple Coin Mining and CJB Cryptog launching zero-fee services, allowing users to earn crypto without hardware investments. By leveraging AI-driven resource allocation and green energy, these platforms aim to democratize mining access. The timing aligns with Bitcoin's supply squeeze, as small-scale holders accumulate aggressively amid price surges. If adoption grows, it could redistribute mining power more equitably and reduce energy concerns, though questions about centralization risks in these models remain. For retail investors, such services offer passive income avenues, but require careful vetting for transparency. Technological advancements are accelerating globally, with China's Chang'an chain achieving 100,000 transactions per second, a milestone for state-backed blockchain infrastructure. While focused on non-crypto applications like real estate registration, this development highlights the scalability potential of next-gen networks. Meanwhile, Chainbase is launching an AI-powered data unification layer to simplify cross-chain analytics, addressing critical interoperability challenges. Such innovations could make blockchain data more accessible for developers, potentially fueling the next wave of decentralized applications in fields like AI and IoT. Regulatory clarity is advancing as the U.S. Congress designates July 14th to 18th as Crypto Week, featuring votes on market structure and anti-CBDC legislation. These efforts align with President Trump's pro-crypto agenda, with the Genius Act potentially reaching his desk by month end. Internationally, Russia's digital ruble pilot progresses toward a July 2025 launch, signaling central banks' steady CBDC momentum. Clearer regulations could reduce market uncertainty and attract institutional capital, though divergent global approaches may complicate compliance for multinational projects. The NFT market shows resilience despite trading volume declines, with Snoop Dogg's Telegram collection selling $12 million of tokens in 30 minutes. While broader NFT sales dipped 4.6% in H1 2025, rising transaction counts indicate sustained collector interest at lower price points. This democratization trend could support more sustainable growth by shifting focus from speculative flipping to utility-driven ownership, particularly in gaming and social tokens. Not all projects thrive, however, as Inception Protocol announced its shutdown due to unsustainable liquidity in DeFi restaking, a reminder of the sector's maturation challenges. Similarly, Pi Network's token remains stagnant despite technical indicators suggesting rebound potential, highlighting how projects without clear utility struggle amid fierce competition. These developments underscore that innovation alone isn't sufficient. Market fit and tokenomics are increasingly decisive in crypto's evolving landscape. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.